Let's go.
What is everybody? Happy Thursday. It is September 9th. I can't believe it's already September, and I'm really excited to be here today for another live stream. Now, we were expecting to have Scott Stuart, who's the head of Kava, but we have someone even better. We have Kevin Davis, the head of engineering from Kava, because Scott was indisposed. But let's talk about what we are doing here today. So the pace of DeFi innovation is exponential, as you guys know. In real time, we're watching small teams and companies around the world offer better products and services than our banks have offered for the past 100 years. As fun and flashy as DeFi has become, one important feature has been left behind by so many of the innovators: safety. Hacks, exploits, and bugs have turned a lot of DeFi into a minefield, leaving investors, participants, traders, and yield collectors exposed to harm. Today's guest made it his top priority to provide the most safe, secure, and reliable experience for accessing DeFi apps and services. So today I have Kevin Davis, head engineer of Kava, here to discuss how to enjoy the benefits of DeFi in a safe way. Kevin, it's nice to be joined by it's nice to be joined by you. I was going to make a joke about two Scotts and the Spider-Man meme, going back and forth, Scott, but Kevin works as well. And we're happy to have you here to represent Kava and answer all our questions. So welcome, man. Thanks for coming.
Hello, great to be here and nice to meet you.
So first, I want to say to everyone that this is, of course, first and foremost, an AMA. The point is not for me to grill Kevin on everything Kava. It's for you guys to ask questions. I know you have a very passionate community. You guys are here. So please feel free to go ahead and ask tons of questions over in the comments. But I want to launch just basically into the first steps here. So give us a bit of background. What is Kava and what are you guys doing there? Why is it important? Why does it matter? Give me the context.
Sure, yeah. So Kava is a DeFi platform that really is designed to be friendly from retail all the way up to institutional participants. And we take sort of a safety first approach to DeFi, which was sort of our initial insight into the market back in 2019 when we started looking at DeFi. Sort of the biggest difference between Kava, which is what's called an application specific blockchain, AKA we have like our own blockchain purpose built by our developers here at Kava Labs, and say something like Ethereum is anyone can deploy whatever they want on Ethereum and tell you that it does something. And it's sort of up to users to DYOR and figure out if they're going to get rug pulled, figure out if the contract has a purposeful exploit in it. Oftentimes these are anonymous developers. It's definitely a wild, wild west type feel out there. And if you're not sophisticated, you often get taken advantage of. So Kava has kind of pivoted from that and was like, we're going to build a DeFi product that is audited from the beginning, that the developers are known, that Kava Labs is the initial developer of all of the products on it. We have a specific process designed so that at launch, we provide the most secure experience possible, as well as you don't need to do that much research to figure out sort of what's going on here. And so that's where we started from in 2019. At this point, we've launched 3 applications that are pretty foundational to DeFi. So we have CDPs for levering up your existing crypto using a sort of dollar denominated debt, money markets for lending and borrowing crypto, and then Swap, or an AMM protocol for swapping between tokens on our platform. And another thing is that all of our tokens generally are external assets. So we have bridges that bring, say, Bitcoin, XRP, BNB onto our platform, rather than just a series of sort of internal or native tokens.
So that's interesting. I would love for you to talk a bit more about the AMM, about Swap, because I know that you guys just launched that about 10 days ago. And when I had spoken to your team a couple of weeks ago, the testnet had launched. The interest in the testnet was absolutely insane. You guys did more volume than some active AMMs just on the when you were testing it, right? So can you talk about the launch and how I guess it's different than the other platforms?
Sure, yeah. So Swap is a AMM style exchange, and we really like the AMM style for DeFi. I think it provides by far the best UX of anything. It is interesting to see these sort of perpetual swap and order book type things, but we've sort of come down that the UX on an AMM is very interesting. And so we launched a sort of Uniswap v2 inspired AMM, as you said, to sort of pretty good traction for trading all of the native and external assets on Kava, and that went live on August 30th. And we've seen pretty good volumes, pretty good adoption, as well as sort of a lot of interest in the Swap native governance token. And sort of all of those pools are incentivized. So any pool that you participate on Kava, you're going to earn Swap rewards. We do rewards a little bit uniquely. I'm sure people have questions about that. But basically, like you get your rewards on a vesting schedule. And sort of we've seen both good adoption in terms of participating in the pools as well as daily volumes, a lot of arbitrage popping up, just a lot of activity around the protocol, sort of that's not anything that we've done, which has been really, really cool. As well as it was a very smooth launch. The product launch, it was immediately available for use. The front end worked, the back end worked. I didn't do that much. I monitored and it was like, oh wow, it's all working. So it was very successful from that standpoint, and sort of we're happy for that.
So I have a couple questions just based on what you just quickly said, and maybe this is great for context for the new people here. Could you just explain what an AMM is?
Absolutely.
I took for granted that maybe people know the answer to that question.
Not everyone here is a DeFi power user. Good.
Right.
So an AMM is a type of exchange in which the price of the two assets is determined by a constant product function. And that just simply means that literally the balance between the two assets will always be the same before the trade and after the trade. And so the price will change completely internally. Uniswap invented this, or sort of was the first person to put this into production. It actually was sort of proposed, had some prototypes on Ethereum, but Uniswap popularized this concept. And it's basically a way for people to trade rather than against an order book. So people put buy and sell orders on two different sides of a book and they clear them. Instead, there's a pool and you trade versus a pool. And this has actually been a very powerful primitive in DeFi. Products like Curve, products like Balancer, products like Uniswap v2, Uniswap v3, they all use this AMM construct, and there's a million different variations that you can do based on the types of assets that you're trading and the types of properties that you want out of it. And so we're seeing tons of innovations just within the AMA space. Kava Swap is our version of an AMA that's sort of our V1, and then we'll work to iterate as well as that space evolves.
What are some cryptos you plan to add to the swap protocol?
So right now we're working full-time, basically full steam ahead to get ETH and USDC or ERC20 USDC bridged into Kava. We will definitely expand that to other ERC20 assets. We're sort of very focused on those two right now, and that's our highest priority. And then of course, Bitcoin in many different forms. So right now you can do BEP20 Bitcoin, or BTCB as it's called on Binance Chain. We'd prefer to have something both WBTC, native WBTC to Kava, ERC20 WBTC, as well as sort of any of the more interesting, almost native-like pegs that you're seeing projects like Thorchain experiment with. All that's very interesting to us, sort of the spectrum of decentralization that you can achieve with these bridged assets, and then connecting to sort of these new L1s that are becoming extremely popular and extremely performant. Polkadot, Solana, Avalanche, you name it. We're sort of building bridges to have liquidity hooks into there as well.
Yeah, I find that to be the most sort of compelling case. Obviously, you always hear the narrative of Ethereum killers, right? And I always laugh every time I hear it, because isn't the future making all of them interoperable? Yes. I mean, everybody can find their niche, and platforms like you connect them, give us liquidity, and then we don't have to worry about choosing.
Exactly, and the odds that anything kills anything in the blockchain space seems extremely unlikely to me. Block space is valuable on good networks. If you have a good network with real liquidity and real users, the block space is valuable. Ethereum block space is extremely valuable. That is not a sort of weakness of Ethereum. It is a strength, and the odds that that's going to go away because someone builds another fast L1, it's kind of nonsense. And so we're interested in the multi-chain, interoperable, hyper liquid future in which liquidity moves between these chains very fluidly. Users move between these chains very fluidly, perhaps not even knowing what chain they're dealing with. And ultimately, what you want to concern yourself with is security, liquidity, and user experience. And that's what we really think will win in the long term in DeFi and in blockchain generally, rather than one chain to rule them all, which we know sort of intuitively is not possible. That the trade-offs you make in scalability and decentralization are going to leave a world for multiple chains.
We have a ton more questions here, but I just want to kind of talk a little bit more about security, because you just touched on it again. What do you guys do that's unique that makes it more secure? Obviously, we've heard about these crazy hacks, right? And they make now mainstream media, right? So
yeah, $600 million hacks should make mainstream media. That's crazy. Yeah,
right. And so why does that happen? And what can we do to prevent those sort of things?
Absolutely, yeah. And I think for us, it's an organizational philosophy that sort of gets at the fundamental tension of DeFi, which is users would prefer innovation to go as fast as humanly possible. Certainly power users and whales would prefer innovation to go at a speed that is, testing in prod is the sort of moniker that came out of DeFi summer, which is like, I'm going to deploy a contract that I have some belief of what it will do, but ultimately I'm going to give it to users and you're going to be my testers for real money. And in an anonymous world, that can even then be turned on its head, where it's like, I tell you I'm doing that, but really I know that I'm going to rug pull in 2 weeks. So that's like the farthest end spectrum of like no safety. And then you have teams that sort of are on Ethereum and sort of practice best practices and have a very secure thing. We take that even a step further and we look at the framework that we're building on. And we feel that the Cosmos SDK provides sort of the maximally secure is not the right word, but able to be secured framework. And so we start with a different framework that is written in sort of this purpose-built language that is meant to be extremely testable, both at the unit testing level, the end-to-end testing level, or application testing, and then fuzzing. So being able to put any possible input into that machine and find out what outputs will come out of it. And then we have internally built our process such that the team that writes the code is not the team that audits the code. So you have code writing and review. We have internal audit, we have external audit, we have incentivized test net. We gear our entire development process, both like individual developers, as well as anyone that we hire, to fit into this paradigm. And having now done this for 3 years, you see the difference. Like we are now able to sort of have the reflexive memory of how to write this type of code, how to reason about these types of problems, as well as the complexity of any individual protocol that we take on, and provide at least a good chance of de-risking it before we put it into production. And it's very much a philosophy and a mindset of development rather than a secret trick. I can't take one team and tell them 2 tricks and make them more secure. But once you've done it for a while, you start to learn the best practices. You start to work in a development team that's very comfortable working with these practices, and it sort of increases your chances of making it to a secure production launch.
Awesome. I have some great questions coming in here. Any plans to implement a tracker of the fees rewarded native tokens while providing liquidity in swap?
My answer is I think we do that. I'm curious what tracking we're not providing. Oh, fees. Oh, I see. Yes, that will definitely be done. Currently, you just get sort of here's what your deposit is worth. You will be able to break it down. Here's what your deposit is worth. Here's what your deposit is worth with fees. That should be done within a week or 2.
Oh, very cool. This is a good question. I'm assuming you guys are going to be getting over and over again in context of what's been happening sort of from a macro regulatory environment. But do you foresee any sort of regulatory risk from AMMs? Is this on the CFTC's radar?
I mean, it's on, I think, every regulatory agency's radar in the US and globally. Uniswap Labs is currently under SEC investigation for what we don't know exactly, deploying software. It is definitely a regulatory unknown right now. Kava Labs navigates that, sort of internally. We've had a philosophy about things that we are willing to do and not do. And in general, Kava Labs deploys software. Kava Labs does not custody users' funds. It doesn't sit in the middle of users' transactions. It provides no custodial services. And that's sort of how we position ourselves. And then ultimately, we engage both with regulators who want to engage with us, as well as keep our ear to the ground on what likely guidance is going to come out of these agencies. But the answer is right now, there is no guidance. The investigations that are ongoing are sort of very shadowy and hard to interpret. And so we will continue to do the best that we can with the information that we have, and then ultimately follow guidance when it comes out.
I mean, incredibly challenging. I kind of ranted about it earlier, but I mean, even Coinbase, right? They go to the SEC transparently with a product that's being offered across the board and get told that they'll be sued and aren't told why.
Yeah, but I can't tell you why we'll sue you. It's definitely security. I can't tell you why, and don't launch.
Right. I know it's totally off topic for you guys, but I don't understand like the threat of litigation rather than, I don't know, regulators just regulating and making it clear, right? We're going to sue you. I don't know what for, but we're also the ones in power.
Regulation of a product that's already out on the market. I can name 5 US companies that provide that exact product already, and they're not, they weren't given cease and desist letters. It doesn't make any sense.
It's nuts. So are there any plans for our bots or other tools?
We will certainly, so we do write some tools. We will most likely open source an Arbot of some kind. We currently don't run one. I know users do. In general, we let our community sort of engage with the protocol to the maximum degree. That's sort of the goal of being the developer, not the user. But yes, we will release tools around swap, both for sort of individuals managing their positions, as well as arbitrage, or people looking for arbitrage opportunities between swap pools and, say, centralized exchanges.
So you touched on this briefly, but I want to circle back to it because obviously I think that most people probably get their first experience in crypto and in trading or investing in general with centralized exchanges, right? You go there, you have your order book, you place your bid, you wait for it to match. So what are the advantages of using an AMM? Why has this exploded so much?
So there's two main advantages. The first is it provides a permissionless UX for exchange in which you don't have to worry about what the other side of the order book is doing. So when I show up to an AMM pool, I know exactly how much liquidity is in there at the moment, and I know exactly what the impact of my trade will be. And if I'm a retail trader who's trading small size, I typically will have almost the same fee as well as slippage as if I was trading on a centralized exchange. So I've immediately sort of replicated the retail experience with a permissionless pool. And then on the sort of fundamental level, if you create an awesome project in the year 2017 on Ethereum, there is no way for you to get liquidity without going to Binance and a handful of other players and asking them to list your token. And the process was arduous and not particularly sort of useful for a company that wants to focus on a protocol. Now we have a way in the year 2020, 2021 to launch a product, have complete liquidity on chain for it, have the ability of any user with an Ethereum address or other chain address in the world to access that liquidity. And so it gives retail sort of access to things that previously would have been completely sort of in the realm of only VCs or early hedge funds, like crypto investors on day one. And so it gave basically a new way to launch tokens for good and for bad. Like, there's an explosion of scams as well. But the fundamental value is sort of the ability to get liquidity to the market and very deep liquidity in some of these cases very quickly and replicate, at least for retail, that sort of trading experience. If you're an institutional person, you probably don't want to take on slippages and things like that. There are a lot of considerations for how do you scale an AMM, and that's why you see Uniswap v3 and other protocols coming out. But I think those are the two things that really drove the explosive growth.
It makes perfect sense. Last DeFi summer seemed to be the summer of the rug pulls. I mean, obviously now we see like the poly hack is very, it's 600 million, whatever, but it's not like we're seeing them daily. I mean, it felt like in the summer, last summer, that we were literally seeing these full-on scam rug pulls on multiple
as well as like
it does seem like that's been somewhat filtered out now.
Yeah, because I think people learned, right? You can only get rug pulled so many times before you're like, I'm not going to believe the anonymous non-developers telling me I won't rug pull.
It's fine. I will not rug pull you. You're going to be fine. So when is Kava going to support additional wallets? Are there any in the works?
Yes. So we support currently Trust Wallet and Ledger. We would like to expand that. Ideally, first, we'll probably do Kepler. We're in the works of that. That's like a Cosmos sort of interchain wallet, very useful for chains that have IBC. And then we're looking at other wallets. I don't want to name names right now. In general, sort of like wallet support is great until they break. And so we will work with the largest wallets, and certainly the ETH bridge will support MetaMask. We're already on that track. But yes, we are looking to expand our wallet list and should be doing so in Q3 and Q4.
Are you guys building your own bridges versus ones available in Cosmos?
We're going to start for sure with our own bridges, and then I gradually adopt IBC as well as what we're calling like crypto economically secured bridges. So there's a huge spectrum of bridges that are basically like send your funds to one wallet and hope for the best. Send your funds to a multi-sig that maybe has some security guarantees around it, or at least some semblance of security guarantees. Send your funds to a crypto economically secured thing that has strong guarantees about slashing or something like that. Typically, the most successful wallets have been on the multi-sig shared security side of things. We're going to stick on that side at first. We're very interested in sort of these long tail developments, Thorchain, IBC, that are crypto economically secure, that have very interesting properties to them. I don't think they're what I want to launch with as V0. A lot of these things are sort of like, if they get hacked, they're catastrophic. If they get stuck, they're kind of hard to unstuck. I don't like the idea of stuck funds. So we're going to start on sort of the multi-sig spectrum, the sort of more common bridge side of things, and then move over time towards these more interesting crypto native bridges.
Seems to be a theme of safety and security.
Yeah, we like to move a little slower than the absolute insane pace of innovation in this industry.
It is so crazy. So this is a good question. What happens to the excess collateral across Kava's products?
So right now, excess collateral generally is unused or unutilized. There is a lot of opportunity across many blockchains to use collateral more efficiently. I would say that sort of like Uniswap V2 pools being an example of a lot of wasted liquidity in terms of getting the depth. We will look at increasing the efficiency of that, as well as potentially utilizing some of those sitting pools of collateral in other products. So, for example, you could imagine like a cross-chain iron.finance or urn.finance. We think that a lot of that stuff is very interesting and will sort of mature in the next 6 to 12 months. And so we consider those things. Currently, though, it basically sits in collateral pools. It probably is rewarded depending on what's going on with it. But yeah, it's an interesting area to think about.
Can you talk about rewards? What's the advantage of someone? This is my own question that I think people would find interesting, but what's the advantage for someone of participating in a liquidity pool, for providing liquidity?
Yeah, so in general, all of sort of Kava's native tokens are basically distributed purely to users of the protocols. So that could be stakers of Kava tokens getting airdrops, but typically it's liquidity providers or users. And so if you're providing liquidity to hard protocol, you're going to be rewarded in hard tokens on some sort of a vesting schedule. And so like we're very interested in long-term alignment between users, protocol developers, and the ecosystem generally. And so if you provide liquidity to hard, if you use hard, you provide liquidity to swap, you're rewarded in those native tokens, potentially also in Kava tokens. Like we have a sort of very flexible use of rewards. And we think that that's actually like a fundamental insight of DeFi, is that like aligning users, liquidity providers, developers, the ecosystem, using these tokens as inflationary mechanisms and having well-predicted schedules for doing so, and then long-term alignment between those produces this sort of virtuous cycle that as the industry grows sort of benefits everyone.
Perfect. I love this question because even me, right? Okay, I'm in my 40s. It's no secret that I'm like the boomer of this industry, obviously, at my age. I came from trading stocks and I went to the Binances and Bittrex and Coinbases of the world. I had no idea what was happening the first time I tried Uniswap, which now is years ago, of course,
Yep.
right? Or the first time that I interacted with AMMs, it was really easy, but I didn't understand what was happening. So I guess, we've seen advancements clearly over the last few years as AMMs have developed, but how difficult is Kava for those who are new to crypto? Do you think that someone who's like brand new could just go show up and get it and interact?
So the absolute easiest, lowest level, yes. You could buy Kava tokens on Kraken or Binance, withdraw them to your wallet, and supply them to, say, hard protocol on app.kava.io. I don't think that would require any particular expertise. You would have to set up a wallet, which is not a zero, but I think a new crypto user could do so. And then we through our app have attempted to make the user experience at least palatable for new people. But certainly you have to think a little bit more in DeFi generally about like sort of where am I getting the assets that I'm onboarding? In the case of cross-chain bridges, what is the actual user experience? What is the security guarantees there? And so there is onboarding frictions in Kava and I think any DeFi protocol, and we work to minimize them. And I think Swap actually makes it a little bit easier because you can start with one token, you can swap it into 2 tokens and provide liquidity if that's what your goal is. And so it gets easier over time, and I think the UX generally improves across all of these apps over time. But we're still working on making it as new user friendly as possible.
I mean, there are certain things you touched on that are just, there's a bit of friction coming into crypto, period, right? Not unique to you guys. I mean, you have to understand how to open a wallet and write down your private keys and do.
Yeah, please write it down.
Right. Yeah. But please save your private keys and don't share them with anyone. The amount of hacks on that side that I've seen of late that people message me about are astounding. Yeah, like some tricky way that somebody gets them to flash the QR code of their MetaMask or share their private keys for some sort of airdrop that doesn't exist, to a fake. It's been crazy. Even people I know who are very diligent have been caught with their pants down. It's pretty crazy, and that has nothing to do with these protocols. That's just scammers scamming, right? Scammers
scamming, getting more sophisticated, as well as I think new protocols popping up, right? I might have really good OPSEC around ETH because I've been scammed before. I go play around in Solana and I don't quite know what I'm doing, right? And you get caught by something. And it is definitely that time in the innovation cycle where people are trying out a lot of new things, and scammers are definitely waiting for them.
You know that NFTs are big when now you start seeing that all the scams are people getting their NFTs stolen rather than their tokens.
Yeah, exactly. Your 5-figure NFT disappeared. Oh no.
Where's the best place to stay involved in the Kava community? That's a really good question.
I would say that the Kava Telegram, both the main Kava Telegram and the hard and swap Telegram communities, are by far our most active communities, as well as like pretty solid at both giving intro all the way up to very advanced level advice on how to interact with Kava. And sort of we really enjoyed growing with that community.
Yeah, you guys do a great job of updating everything on your Twitter as well. So I guess for people who are
Twitter is good if you just want
more passive and want to see what's going on, sort of get the news. That's a great place as well. But yeah, the Telegram is extremely informative. What makes USDX a better stablecoin than other stablecoins, and would failure in keeping it stable suppose a systematic risk for the Kava ecosystem?
So I think the value prop of USDX is a collateral-backed stablecoin that's backed by multiple different collateral types. Ideally, as many external collaterals, right? The goal is to have the best cryptos in collateral, collaterals in crypto, regardless of what chain they natively live on, backing this stablecoin and backing it fully. We've seen a lot of designs that sort of either are unbacked or are partially backed. We are sort of philosophically in the safety camp, as well as in the sort of like how you're going to create something from nothing. That in general, these stablecoins need to be backed, and their value proposition comes back to the question of like, how long will centralized stablecoins be the dominant form of collateral in DeFi and in all of crypto? If the answer is forever, right? If the answer is USDC becomes the new M2, then maybe everyone uses USDC. But is it permissionless? Is it going to sort of serve the global liquidity needs of the world? We don't know that yet. And so currently, all of these stablecoin designs are basically the best alternative we have in the case that centralized stablecoins either become non-permissionless, become non-usable. And so that is the design goal of USDX. And I think its strength is that we target the best collaterals. We bridge them over, and we create a stablecoin that is backed by them. Ideally, again, diversifying over time in terms of its risk profile. And sort of, I think it's still very early days for decentralized stablecoins. I think DAI provides a great roadmap for creating stability. And then sort of usability will ultimately come down to sort of how does this regulatory landscape evolve? What is the demand for decentralized versus centralized stablecoins?
I mean, so to that end, I mean, we've all obviously heard the Tether FUD for years and years and years, which doesn't particularly concern me, but is there concern with more centralized stablecoins? I mean, we just talked about the Coinbase, obviously, and the SEC. I park USDC on some of these platforms for yield, right? I mean, it's part of my strategy. Is there any systematic risk there with, these more centralized stablecoins that are reporting, and are being somewhat at least regulated?
Yeah, I think that's the biggest black swan risk in the industry right now, right? I think and it has to be a combination of both an unbacked centralized stablecoin. So the Tether FUD being true. I've been around long enough to be pretty skeptical, as well as I have a decent working knowledge of how Tether the business works. I personally don't put a lot of weight on Tether being completely unbacked. Like that is not the FUD that I consider interesting or sort of a black swan type thing. But USDC moving from a whitelist that never gets, or blacklist that never gets used, to a very active blacklist thing, or protocols being no longer able to interact with centralized stablecoins. Those are real regulatory actions that I think would cause a black swan event. And then given the leverage in the system, could cause like a cascading liquidation or a cascading failure of either a peg that we think should never break, right? We don't think that the USDC to US dollar peg can break. If it did, it would cause a lot of assumptions to break. And in DeFi, it might cause sort of some protocols to become completely insolvent. And so that's the biggest sort of like black swan risk is we go from assuming anyone can use USDC and it's worth $1 to it's not true and it's not worth $1. And sort of that would be a bad day for crypto. And
right, or they just have to, like you said, or they just block it. They regulate it basically, and all of a sudden you can't access it. Bank run. It's interesting. I mean, I view it as a very, very minimal risk, but I definitely understand why now there's a major focus on more decentralized stablecoins, right? I mean, doesn't this play? Maybe we should talk about this. Doesn't this play to some degree to the very core reason you're building all of this decentralization? I mean, it's sort of like we talk about centralization versus decentralization. I think to a lot of people, it's just sort of this theoretical idea, but everything you guys are building is a path completely away from centralization, right? I mean, why is decentralization so important, I guess, should be the question here. Why do we need to concern ourselves with this? Not today, but, as an ethos moving forward.
Yeah. And I think the first answer for me is decentralization is important as a form of defense against sort of bad outcomes in the financial system. Some of those bad outcomes actually exist today, and that's why DeFi is a thing, right? The presumption of permission versus permissionlessness, I would argue very clearly should weigh on the side of permissionlessness, right? Sure. All of finance today is orchestrated around permission, around identity, permission, and trust. Reworking that to be permissionless, trust minimized, and pseudonymous is actually very powerful, and I think very empowering for the vast majority of users, and I think is fundamentally a better architecture. So we actually are already seeing benefits of decentralization just in terms of the individual user. But then the ultimate benefit, or the ultimate thing that you're guarding against, is sort of this closed financial system in which it is not okay for liquidity to move globally, where it is not okay for, people who want to form a market together are not able to do so, or people with certain ideological beliefs are not able to access the financial system. And if that were to expand greatly in scope, really the best tools that we have to combat that are decentralization. And so at the simplest level, it's something like Bitcoin, which is just a very simple protocol that makes the strongest humanly possible guarantees about anyone being able to use it at any time as long as they have a wallet, all the way over to sort of these in-between products that we see right now with DeFi that have definitely human intervention, or at least human actors who are responsible for some portions of the system, as well as sort of like various degrees of touch points with regulatory bodies or existing bodies of the law. And finding a place where people can build protocols that today are permissionless and literally derive value and deliver value to users, but then also serve as sort of this ultimate defense of, we believe in an open financial system. We believe in an open internet. We have actually seen the benefits of that play out over the last 20 years. And when it's threatened, we really want to have the maximum possible tool set for maintaining what we have and ideally expanding it.
To that end, do you believe, and I'm always interested in asking people who are building in this space, do you believe that, like many, I guess, that DeFi replaces the global banking system and all financial systems, or do you see it as a parallel rail and an opportunity, A, for people who understand how, I guess, oppressive that system is to opt out, but B, just for the unbanked and people who don't even have access to it in the first place? Do you think it can completely replace it, or do you see it as a parallel rail for those other people?
Yeah, I would say my views have evolved in this over time since starting to build in this space. And then I am much more of the opinion that we are going through a multi-generational shift that will actually replace all of finance. That essentially the disintermediation and the increased lack of friction or frictionlessness in capital markets is like just an inexorable force, and that every person who experiences it takes a long time, right? Your parents are not going to adopt it, DeFi. I think that sort of process will take a long time, but that the arching trend of history will actually be that DeFi basically, or permissionless finance, becomes the default assumption, and that it essentially replaces the systems that we have, as well as digital becomes the first conception of what finance is, right? Right now we have an analog conception of what money is, and I think that will actually probably switch in a couple generations. And so the whole foundation will be rebuilt and will look more like DeFi than it will look like what traditional finance is.
A couple generations. Right.
That's
so
my
this
guess.
is not right. So I agree, but this is not for the impatient, right?
No,
in 5 years, the
nor
global
is it a
banking
straight
system
line up.
doesn't disappear. Right.
Yeah, it is not the adoption and development of DeFi is not a straight line up. It will not be. It looks like it right now. There are real questions that still need to be answered, as well as real centers of power who would prefer that the answer not be DeFi.
Well, I mean, this effectively threatens and replaces every large power structure in existence, right? Because if you, even if we just assume that the core facet of all of them is money and power, this removes that.
Yeah, as well as reimagines it, right? It just, it completely redefines what the relationship is between an individual and their money. And that is a very powerful concept, but it's also hard to understand for an individual, and people in power would prefer that it not happen overnight. Certainly.
Absolutely. It won't. Yeah. So, and guys, I want to remind you, these are great questions. Keep asking them. We've still got plenty of time left. So how is Kava able to offer 20% in staking on Kraken, et cetera?
So the Kava protocol is inflationary. And so anyone who has Kava tokens and stakes them earns a inflationary reward basically for securing the protocol. There is a wide range of inflation rates, as well as Kava has changed its inflation rate over time, and we will continue to do so. We are an active governance chain. And so right now we feel that 20% is like the balance between getting enough tokens to actually secure the protocol and keeping people interested in staking. And so if that changes in the future, it may go down. All of this is very variable. But currently 20% has been both sustainable from a security and from like a supply and issuance perspective.
So it's not because you guys are out there aggressively prop trading our Bitcoin for profit, right?
No, it is not. Yeah, there is no magic. The supply of Kava increases every block. You can track it. I promise.
It's amazing what you can do on a blockchain, right? When it's public, and yeah, it's really interesting. But that is, I mean, people don't realize, but that's how a lot of yield. That's a very simplistic explanation.
That is
but
maybe
a lot
the
of yield.
bedrock of yield in DeFi is staking protocols provide inflationary rewards, and then there is demand to borrow cryptos. Those are the two bedrocks of where the yield.
Which is funny because you never dare hear anyone say the word inflation, crypto, but it's not the same inflation.
Programmatic, at least, as well as you can look at the total supply. I can't look at the total supply of USD.
Right, exactly. So this begs a bigger question, but I'm going to go ahead and ask you this first. What institutions is Kava working with? Can you name some or give us a hint?
No hints. I provide no alpha as a general job description. I try to keep the playing field fair, as well as if we're going to have a public announcement, we try not to have leaks. In general, though, there is a lot of institutional capital that is very interested in participating in DeFi and cannot do so for a number of reasons, both regulatory risk and literally LP understanding. Kava is engaged with a number of parties about breaking down those barriers. Basically, where can we meet them that meets their sort of risk parameters as well as mandates, while still providing access to a true DeFi product and suite of products, as well as that interconnectivity that really, I think, makes it interesting to financial institutions. And so that is what one of our sort of leading goals is on the business development front. Can't give you any super sweet name drops at this point, but it is definitely something that we think about as well as talk about with institutions. And sort of, I think it will be, more of a 1 to 5 years type thing. We're not going to see overnight just all of a sudden all the institutional capital apes into DeFi, but it's going to happen, and it's going to be a sort of slow and steady growth area, I think, for all of the DeFi protocols.
It's been hard enough to get them to buy Bitcoin, right? I mean,
exactly. We just got them to understand the value prop and buy Bitcoin. It's going to take a little while before they're like, full.
We really
DeFi.
needed Mark Cuban not to get rug pulled. I mean, that's what that was the first thing, is we needed to help out Mark and not
rug pulling.
Stop rug pulling our billionaires, please. Happens to the best of us, I guess. But so I was going to say this sort of lends to a bigger conversation, which is DeFi and institutions. So I think there's some clarity, because people think of institutions, they might be thinking of the biggest institutions of the world, but institutions can also mean a small crypto hedge fund, right? I mean,
as well as people who have institutional mandates. Not everyone who is an institution has institutional mandates, and not everyone who's not an institution. Like, people have institutional mandates who are not the largest capital operators in the world. Right.
But so that being said, then that probably circles back to security, right? You guys part of your pitch is we're building institutional grade products, right? So not saying that means they're going to buy it today, but you're building the infrastructure so that they will be comfortable in the future. It's sort of like, I've made the argument many times. We always joked it wasn't a joke at the time, it's a joke retroactively. In 2017, Bitcoin price is going up because institutions are here, right? Institutional money. And you look back on that and you're like, was Tesla going to buy $1.5 billion and like put it on a ledger in someone's safe? Like, we did not have the infrastructure for institutional adoption. That's being built now in Bitcoin. So is that sort of effectively the track we're on here with DeFi? Is we have to just make it secure and build these platforms so that they even can think about it.
Yes, you have to get the product requirements, basically. And previously the product requirements are literally like whatever degen apes on Twitter want, right? They are very disparate from what large capital managers want and in fact require. And so talking to people, getting the product requirements correct while serving both groups is what Kava Labs' goal is, right? You lay the foundation, you also prove the security out, right? That's what's so great about DeFi is we get literal day-to-day interaction between markets, users, ecosystem, and developers. And being able to iterate that fast, being able to see that sort of cycle go, that is part of the security profile of these things. Literally becoming Lindy in the sense of we haven't gotten hacked in 3 years is part of an institutional's due diligence process, as well as then any features that need to be sort of easily exposed. Those have to be down at the base layer before, as you say, they can think about it, right? Or they thought about it and they can say, I literally can't do this until X, Y, and Z are met. We want to meet those requirements, and then we want to prove to them that sort of this process can be institutional grade.
Kind of scary, right? You like one hack and it resets the clock.
It does, yeah. DeFi is tough.
Yeah, I don't know how you sleep at night. Oh, we have a question about that. So we can tell you're passionate about DeFi, but what specifically about it motivates you most to get out of bed and do it every day? I was going to say you probably don't sleep when you are in bed because you're probably stressed about everything that you're doing can happen. But why this? I mean, you could clearly be building anything.
Yeah. So to me, this industry is the only industry that I've worked in that I legitimately do not know what is going to happen. And so I get out of bed every day and I am ready to be surprised. And the number of days that I'm surprised is shockingly high. Just, what was it? Tuesday, I checked, my regular rounds and I see that Brian Armstrong is out aggro tweeting at the SEC. These types of things going on in our industry are extremely important. And the reason it moves as fast as it does is because this is sort of a paradigm shift in how we think about something as fundamental as money. And so that to me is endlessly fascinating. I literally do not have enough time in the day to explore everything that I find interesting about it. And when I wake up, I'm ready to do it again the next day. And that's been true since I started thinking about crypto in 2017, since I started working at Kava in 2018. And it has, if anything, sped up, not slowed down.
So do you guys ever sleep? Come on.
I mean, I've had to relearn to sleep, but yes, I do sleep. It was tough. Late 2020, early 2021, no sleep. DeFi summer was not healthy. Not healthy.
Yeah, like 4 hours a night was just killing it, right? I mean, you explained it. It was really incredible. I sleep generally. I've never been a sleeper myself, but the first thing I have to admit, like all of us, and I'm not building anything, but you wake up in the morning and the first thing you want to know is what's happening. Right.
What's happening, and is my blockchain still alive? I don't worry that much about it, but is the blockchain still alive? You still want to know.
That seems like, I don't worry about my blockchain being alive. So maybe you've got bigger concerns in life than me. This is great. What does Kava mean? And then he followed up. What does the word Kava mean? I
mean, it is. I associate the word Kava with an herbal tea that is drunk in Fiji and Hawaii. It is a root that is pounded, and it produces a moderately numbing effect. And so that is probably the most common. I believe that is CAVA, Kava, but I actually don't know. But other than that, that's basically it. We thought it was a nice 4-letter word that rolls off the tongue and sort of has at least a known usage. But it is not an acronym. It does not stand for financial freedom. It is just what it is.
Usually it's like, man, what 4-letter web address can we get? So you had even a better answer than most, to be quite honest. This is just a comment, not a question. Back to what we were talking about, obviously, 200 years of big banks dug in, they won't give an inch without a major push, right? I mean, that sort of goes back to what we were talking about, that, as exciting and fast as DeFi is, for it to become mainstream and replace the systems, I mean, these guys are not going to let that happen easily. And
nobody's getting their checks direct deposited into DeFi right now, right? It has deep hooks into the financial ecosystem, and I would say many people are like, cat's kind of out of the bag from that perspective. And I would be like, I agree to some. There are certain things you can put back in the bag. The actual financialization of the internet, I don't think you can put back in the bag. I think that is a trend that's here to stay, but the average person's interaction with it is still very low. Their average person's understanding it is very low, as well as most people's intuitive understanding is still very skeptical of why would I ever want to do this. And that will be the thing that takes a long time. That you can have a financialization happen without having everyone realize what's going on and participating in it.
Gotcha. Hard Pro for institution is on your roadmap for 2020. What is that all about?
Yeah, so that's about launching the initial product that meets the requirements for institutions, as well as the initial partners who are interested in that project. I can't give full details of sort of where we are in that, but it is certainly on the roadmap. It is actively being pursued both from business development and from engineering, and it will sort of be one of our primary pushes with the hard product going forward.
I love this question, Austin. What is Kava doing to ensure that retail investors like myself, LOL, because I qualify as like myself, LOL as well, by the way. What is Kava doing to ensure that retail investors can take advantage of all your products, but be smart in doing so?
Yeah, I think the biggest thing we do is we try to have fair launches, literally in the sense of, can a retail person understand what product is being launched, and is it secure on the day of launch? And is it accessible to everyone on day of launch? I think Swap actually did an incredible job of demonstrating sort of what that looks like. And so we aim to do that with all of our products. So whether Kava Labs is building a new protocol or whether an outside team is building a new protocol that's going to be deployed onto Kava, that is what Kava Labs does as a developer and as an organization, is sort of not completely de-risked. You cannot de-risk a DeFi protocol. These things are very complex. They're almost a bit like living organisms, but we provide the tools so that retail can at least engage with them on day one with the same level playing field as everyone else, as well as knowing that the process that went into it is a process that has, at least in the past, produced secure outcomes. And so that's sort of what we try to do every day, and we'll continue doing going forward.
I mean, you have to assume that it's only going to get better for retail, right? I mean, even in the last couple of years of DeFi, we've seen how much safer it's become. But I would imagine that, even though it's sort of in its infancy, I think the worst of it is, maybe I'm optimistic, but I think the worst of the nonsense is sort of behind us. And now it's just going to be a race for the best tools.
Yeah, best tools, best user experience, fastest balancing of innovation and safety is going to be the things, as well as like, there's an increased recognition that like these fair launches or fairer launches sort of are beneficial, generally speaking, not just for the people who participate. And so I think that will be a trend that continues, and sort of the amount of access that retail has had in this industry far outstrips the average access that retail has in generic insert industry here. And I think that will again increase over time, not decrease.
Yeah, imagine going to your bank and trying to do literally anything.
Imagine physically going to a bank.
Let's stop that sentence. Imagine going to your bank. Right. Just leave it right there. It's so true. So I think you guys have been very clear about your roadmap and what's coming. And people, obviously, you have your community here in the questions, asking questions specifically about that. But we've talked about the fact that this could be a generational project, right? Kava, not specifically, but DeFi, that it's, it takes everything becoming digital and totally a paradigm shift. So when you think about 10 years from now, 20 years from now, 30 years from now, what's the vision for, I guess for you, maybe it's hard for Kava, but would you assume, what would that vision be for the company as well, for the protocol?
Yeah, so I think, 10 years down the road, 10 to 30 is about as far as I can imagine, literally, given the pace of innovation, because it is turning over so fast that like things that I thought definitely would not come true in 2017 by 2021 have not only come true, they've come true like roughly 10x larger than expected. And so the true fundamental innovation here is like very, very hard to predict. But I do think that some of the sort of more interesting thinkers in the space, not people that I necessarily agree with on everything, but who sort of have these long-term views, people like Balaji. Right, so he views this as sort of a fundamental reworking of money, and that's the next 10 years. That's going to happen, right? But then there's the reworking of political power, right? How does this now financialization and digitization of everything threaten the nation state or rework the nation state, right? How does political and community alignment change when we now have things like DAOs, which are completely global, permissionless organizations that people can opt into membership, right? How does it change if we can verify information or have a notion of verifying information on a global shared public ledger? How does that rework everything that we do in society? I think the answer generally is that it will do more than you think, that sort of your wildest imaginations are more likely to come true than your most pessimistic ones. And that sort of Kava is going to be there in the financial space. So Kava is not going to pivot to NFTs tomorrow. Kava is not going to sort of pivot to some far out use of blockchains. We see that there is a secular opportunity and growth in the financial space, and that we will get as far as possible while remaining sort of committed to a principle of maximum decentralization as well as maximum sort of separation between Kava Labs, the protocol developer, and Kava, the protocol, which is ultimately owned by the users and Kava token holders. And we will continue down that road. Whether that road takes us sort of further into the regulated space or the current DeFi space, we don't know, right? There's so much to navigate at a strategic and company level that it's hard to speculate that far out. But that the secular growth, the secular opportunity is the thing that we see, and that has not gone away, and we will continue pursuing that.
So your crystal ball is broken. Your inability to judge what regulators will do
broken,
in 10 years.
Broken at this point that I've thrown it out. I'm like,
Yeah, I expected you to be able to tell me what regulation would look like in 10 years and how you'd be operating in that context, but I guess I'm not going to get that today.
Yeah, if you told me 2 trillion total market cap for cryptocurrency in 2018, I would have laughed at you.
Yeah,
absolutely.
Everything is always exponentially larger. Yeah. Either it completely fails or it goes so far beyond your wildest imagination. And these days, I remember going to college in the 90s. And when I graduated in 99, they told us a fact. It was like a graduation speaker or something. Everything you learned your freshman year has effectively been replaced, right, with new knowledge. There's no such thing as, everything has evolved so much in 4 years. Now it's in like 4 minutes.
Yeah.
So the pace of technology is astounding. There's something that you just said that I want to touch on because I've noticed a trend in the space since maybe 2018-19. So it was sort of like, remember when that iced tea company put blockchain in their name and their stock went up like 500%?
Long iced tea, I believe.
Right,
something like that.
Right. So there was this moment when we had all these protocols and all of a sudden last summer, everybody became DeFi, right? Yeah. People that were not developed to be DeFi had nothing to do with DeFi. They just became DeFi, right? Because it was the catchphrase. Now, many of those, I can't say all, became NFT platforms.
Yeah, we're
right?
NFT
because that's
platforms.
The hottest thing. You just said that you guys are committed to basically being this one thing and doing it right. That makes you a bit of a unicorn, doesn't it?
Yes, and that was our insight in 2019. Is like this is the opportunity, right? We looked at the growth. It was 2018, but it was the end of 2018. We looked at the growth on Ethereum as well as the properties of these protocols, and we're like, people don't realize that these protocols are going to last a long time. MakerDAO is not going to collapse in the next 2 years, right? It is not. Compound is going to grow over time. All of these things are going to become financial primitives, and if you actually understand what a financial primitive is and how much sort of capital tends to conglomerate around things that are more efficient, you're just like, we have to do this. And that was our feeling. And we're like, yes, it's very early. Yes, the value prop is even hard to explain to investors right now, why you would want to do this in a cross-chain manner, why you would want to focus on a security first mentality when developing something in such a high-paced environment. But the opportunity hasn't changed, right? In some ways, the market has caught up to us. Right now, we're learning from the market as much as, we feel like we're ahead of the market. But the fundamental sort of just insight around this is going to rework the entirety of the financial system and faster than you think, that hasn't changed to us. And so we continue on that exact vision, not on becoming the sweet NFT platform.
So you will not be pivoting to expensive JPEGs today.
The finest JPEGs.
The finest, the highest quality JPEGs. But I mean, I think that gives people probably confidence to see a roadmap that remains in place and doesn't change with the wind. I think that that's really important because I don't think that that's the norm. I really don't. It's
not, as well as I love everything else that goes on in this space. I am an observer of this space, and I'm like, cool. I hope that other companies specialize in this, or other groups of individuals specialize in this and knock it out of the park and go 1000x. I'm not going to chase the thing that sort of I have very limited familiarity with and I've used 2 times, right? I'm okay leaving the market to the market and focusing on the thing that I think genuinely we have a sort of edge on, not from an insight perspective, but from an execution and commitment and drive perspective. And so that's what we're going to do.
It does seem like there's an inclination to chase the shiniest new thing in this space, and that's how innovation happens. I'm not criticizing it. It just definitely is the trend. And there's a comment, but we see TradeFi companies masking themselves as DeFi in an attempt to appeal.
Yeah, I mean, it's a strategy. You definitely also appeal to regulators when you put that mask on, and so I think we're going to see a separation at some point between DeFi and it's meant to be DeFi, and we thought a lot about what it means when we say DeFi, and DeFi, but oh, by the way, we custody all our users' funds, and that's a problem, right? And so there's going to be a reckoning there. It might take longer than people think, but yeah, I think that eventually things will get sorted and people will understand what DeFi actually is and what its properties are versus throwing the label on your coin, your company, your iced tea, and hoping for the best.
Maybe they'll just change the D from decentralized. It's like depressing.
Depressing finance.
We weren't saying decentralized finance. It's depressing finance. Are there any concerns about the scaling of Ethereum? I mean, obviously DeFi exposed it a bit, and NFTs have exposed it more. And I think this is across all protocols, but do you think that there will be technological growing pains at scale with insane gas fees on different platforms or other things that we haven't foreseen? Because I think that's been, for people who came into DeFi and it was mostly Ethereum, I think that sort of has been challenging. I think a lot of people have sort of dismissed it and not come back because they were like, well, I'm not paying $180 to do a $100 transaction, so bye, right?
Yes. My short answer is yes, there's going to be growing pains. And one of the growing pains is that all of this stuff is built on something we call a blockchain, and no one has solved scalability for blockchains. And anyone who tells you they have, I'm going to disagree. That's sort of like, even if you take the most optimistic assumptions about protocol advancements and consensus algorithm advancements, there's going to be growing pains, both from the perspective of literal, how do we scale to the number of users who actually want to use this software? How do we provide a user experience for a $10 user, a $100,000 user, and a $10 million user all on the same platform? As well as how do we prevent a scenario in which one hack takes all the collateral, right? All of those are sort of just fundamental problems that sit out in the DeFi space, and every day they don't get exposed, sort of people forget more about them. But they're going to rear their head at different times in different places. And that's before you get to sort of some of the off-chain interactions, right? Oracles, institutions that hold real world assets that become custodied or represented on blockchains. All of these are going to present an additional set of problems. And then the question of how do we maintain composability, right? If we are increasingly moving off a single platform that has a single database like Ethereum that everything is then composable within, how do we maintain that if we now have 10 different networks talking to each other, moving collateral between one another? All that's going to come out, 2-5 years. We're going to have those questions. But in the meantime, you can spend a lot of time thinking about how you're going to prevent the most obvious of those, as well as how you're going to get to the absolute maximum capacity before you break, right? And that's what we spend a lot of time thinking about.
Is it just an endless balancing game, scales of justice? Like what, does more speed come with less security? Is that generally what people are weighing, or is it is that not? I mean, is that too simplistic?
I mean, that's not too simplistic, but like there are nasty trade-offs, generally speaking, to be made, as well as those trade-offs you don't know how nasty they were until something bad happens, right?
Right.
You can run a pretty performant network with 3 nodes or something like that, and then if you get regulatory enforcement that targets 2 of those nodes, you don't have a network anymore, right? And so and usually it's not that stark, right? The trade-offs that we're making, but there are certain trade-offs that we will probably make in the name of scale that we will regret at some point as an industry, as well as certain trade-offs between centralization and decentralization that when it matters, we will say we would have been better off focusing on more decentralized solutions than centralized solutions.
Even if it took longer.
Because wow, that was really painful to change, right? That was a really painful transition period. We are definitely on the still optimistic, hoping for the best path, I think, on a lot of things. And some event or series of events will cause things to change course. Impossible to predict, as well as sort of what will be the precipitating event. But I think DeFi will experience that.
I love Ethereum. I'm a huge fan. I have been for a long time, but we're sort of seeing that in real time, right? I mean, Ethereum 2.0 feels like it's always a year. I mean, you talk about, it's a behemoth, right? I mean, to transition from proof of work to proof of stake and to actually make that happen. Not that they would have ever done proof of stake in the first place, but making a transition once you're on a certain path becomes...
Upgrading live networks is not fun. Not easy.
I would imagine. So listen, I want to give you the chance to tell everybody, well, first of all, final thoughts in general, anything I might have missed that people should absolutely know about Kava. If we covered it all, that's even better. And then, what we should be looking forward to, anything people should be keeping their eye on that's coming in perhaps the near future. And then, of course, you can tell people where to follow you and where to follow Kava.
Yeah, so absolutely. I think the only thing I didn't call is that we love people to use our products and give us feedback, or our protocols and give us feedback. So app.kava.io, check it out. Definitely hop into the Telegram, right? If you as a user sort of have feedback, we really appreciate that, as well as moving faster to satisfy users is sort of one of the main benefits of working in DeFi. And then second, I would say things to watch out for is that ETH bridge, right? The expanding assets generally. I think the speed of cross-chain integration is going to go pretty quick in the next couple of quarters, both here at Kava as well as in the industry. So keep your eye on sort of bridges, new assets being onboarded, as well as new opportunities for yield on those assets, potentially cross-chain yield and things like that. And then, yeah, definitely follow the Kava Labs Twitter. That's probably the best sort of day-to-day keeping people informed. And then if you want to sort of get deep into the protocol, get deep into the community, the Kava Labs Telegram or the Kava Telegram, as well as the Hard and Swap Telegrams, are very active.
Awesome. Thank you so much for taking the time to do this. You answered every question very impressively. I'm always impressed when someone can field questions about every single aspect, not only of your own protocol, but obviously of the entire space and everything. I think you did it exceptionally well. So I want to thank you guys and Kava for being so incredible and so supportive in general. And so everybody, where can people follow you? Did you mention that? I don't think so. What was your Twitter?
Reluctantly on Twitter, Kevin JY Davis. Don't post a lot, but maybe every now and then.
Everybody follow him now. He's so reluctant. We need to make him less reluctant now. You're going to have to post aggressively on Twitter, right? So thank you, everybody, for showing up. Thank you once again, Kevin, for doing this. Really, really informative, and hopefully people will play this back and continue to learn and follow what you guys are doing in the future. Everyone, I will be back 9:30 a.m. tomorrow morning as usual, and then back again at 1:30 p.m. tomorrow Eastern Daily Time. Thank you once again. Check out everything Kava has. The links are right down in the description below, to be clear. So you guys, if you didn't catch them talking about the links, you can just click right down below. It's all there. Thank you guys once again. See you tomorrow. Peace.
All right.
That's dope.